Solar, wind, and run-of-river. Channeling these renewable titans can help the country secure a 50% renewable energy share in power generation by 2040. That's what we do. We are Citicore Renewable Energy Corporation, or CREC, supporting the government in powering a first-world Philippines through pure renewable energy. CREC has a growing presence in solar generation through 285 megawatts of gross installed capacity, and recently secured 61% of total auction quota for ground mount solar in the 2024 Philippine Green Energy Auction Program. This is part of a planned 5 gigawatts increase in 5 years, adding installed solar capacity in the short term, expanding to solar assets with battery storage, onshore wind and run-of-river in the medium term, and developing offshore wind projects in the long term. This is possible through in-house end-to-end development capabilities, strong adherence to regulations and governance, and partner communities that help plant seeds for education and livelihood. We are CREC, a Philippine-focused company channeling the renewable titans of solar, wind, and run-of-river to help secure energy resiliency for the country. Citicore Renewable Energy Corporation, powering a first-world Philippines with pure renewable energy. Solar, wind, and run-of-river. Channeling these renewable titans can help the country secure a 50% renewable energy share in power generation by 2040. That's what we do. We are Citicore Renewable Energy Corporation, or CREC, supporting the government in powering a first-world Philippines through pure renewable energy. CREC has a growing presence in solar generation through 285 megawatts of gross installed capacity, and recently secured 61% of total auction quota for ground mount solar in the 2024 Philippine Green Energy Auction Program. This is part of a planned 5 gigawatts increase in 5 years, adding installed solar capacity in the short term, expanding to solar assets with battery storage, onshore wind and run-of-river in the medium term, and developing offshore wind projects in the long term. This is possible through in-house end-to-end development capabilities, strong adherence to regulations and governance, and partner communities that help plant seeds for education and livelihood. We are CREC, a Philippine-focused company channeling the renewable titans of solar, wind, and run-of-river to help secure energy resiliency for the country. Citicore Renewable Energy Corporation, powering a first-world Philippines with pure renewable energy. Solar, wind, and run-of-river. Channeling these renewable titans can help the country secure a 50% renewable energy share in power generation by 2040. That's what we do. We are Citicore Renewable Energy Corporation, or CREC, supporting the government in powering a first-world Philippines through pure renewable energy. CREC has a growing presence in solar generation through 285 megawatts of gross installed capacity, and recently secured 61% of total auction quota for ground mount solar in the 2024 Philippine Green Energy Auction Program. This is part of a planned 5 gigawatts increase in 5 years, adding installed solar capacity in the short term, expanding to solar assets with battery storage, onshore wind and run-of-river in the medium term, and developing offshore wind projects in the long term. This is possible through in-house end-to-end development capabilities, strong adherence to regulations and governance, and partner communities that help plant seeds for education and livelihood. We are CREC, a Philippine-focused company channeling the renewable titans of solar, wind, and run-of-river to help secure energy resiliency for the country. Citicore Renewable Energy Corporation, powering a first-world Philippines with pure renewable energy. So
Right. So good afternoon, ladies and gentlemen, and welcome to another episode of Company in Focus. I am Peter Garnase, and I will be hosting today's session. We are joined today by the management team of Citicore Renewable Energy Corp, or CREC. CREC is a leading pure-play renewable energy platform committed on the development and operation of RE projects in the Philippines. Established in May 2018, CREC has grown into a diversified RE platform, boasting the second largest solar portfolio in the country, with an installed capacity of over 285 megawatts. And to share with us more details on the company's growth prospects, future plans, and strategies as they brave the IPO market this year, the second in 2024, let us all welcome the management team from Citicore Renewable Energy Corp, or CREC, composed of Mr. Oliver Tan, President and CEO, Ms. Mia Cortez, Chief Finance Officer, and Ms. Joanne Cosico, Chief Investor Relations Officer. Before we proceed with today's session, I would like to run through quickly on some housekeeping matters. While all attendees will be muted during the presentation, you are more than welcome and encouraged to type in your questions in the chat box. We will then proceed with a live Q&A after the presentation from our speakers. So without further ado, I will now pass on the virtual floor to CREC management.
Thank you, Peter, and good afternoon to all our friends of First Metro that are joining us this afternoon. And we hope that you stay tuned and listen as we go through the company presentation and make an informed decision, perhaps about participating in our upcoming IPO. So let me begin with a brief introduction and overview of Citicore. Citicore Holdings Investment Inc. is the company that serves as the conglomerate behind engineering and infrastructure giant Megawide Construction Corporation. Megawide, a listed company in the Philippine Stock Exchange since 2011, has been an active participant in the government's infrastructure tenders, either as a pure contractor or as a contractor and operator of concession assets. On the right-hand side, you will see our power and utility arm under Citicore Power, which owns 100% of Citicore Renewable Energy, the one that is italicized in the broken green lines. So this is Citicore Renewable Energy Corporation, or CREC, is our renewable energy platform and is the issuer of this planned offering. CREC is a Philippine-focused, diversified renewable energy company with solar, wind, and hydro platform. If you look at our solar platform, we have 10 solar assets contributing or generating a gross installed capacity of about 285 megawatts. On the middle portion, you will see our wind platform, and this will house both our onshore and offshore wind. We also have a hydro platform, and this currently houses our Maiden Run-of-River project that we are constructing north of Manila, North Luzon. CREC is also the sponsor of the Philippines' first renewable energy REIT, the Citicore Energy REIT. So for those of you that have participated in our IPO listing of C-REIT last 2022, welcome to this afternoon's company presentation, and we hope that you are still happy shareholders of the REIT. No? Just to let you know, C-REIT is the largest REIT in the Philippines with 7.1 million square meters of leasable space. No? And it has been performing quite well. So that tucks in our second listed company in the group. CREC also owns Citicore Energy Solutions Inc., or CESI, which is our retail electricity supply license, allowing us to directly sell to customers. The next section will walk you through various investment highlights. I'll just go through each one of them. First, Citicore is a Philippine-focused, pure renewable energy developer and contractor. And as mentioned earlier, with our 285 gross installed solar capacity coming from 10 assets, we are currently placed as the second largest, following AC Energy. In last year's Green Energy Auction Program of the Department of Energy, Citicore secured 430 megawatts out of 1,449 megawatts for solar. So this is for ground-mounted solar, or a 23% overall awarded capacity. For the onshore wind, which was also bidded out, Citicore won 362 megawatts out of 1,100 megawatts for onshore wind, representing 25% of overall awarded capacity. Citicore's strength lies in its full vertical integration from pre-development, land acquisition, securing regulatory permits, and of course, construction execution backed by an engineering DNA coming from our mega-wide roots. No? And of course, we manage our operations and maintenance for all our plants with the use of real-time computerized systems that monitors plant availability and asset management. For the second investment highlight, there is a strong and long-term opportunity for renewable energy development in the Philippines. This is in line with the Philippine government and specifically the Department of Energy's energy transition vision of securing our energy supply coming from renewable energy sources to contribute 50% in 2040. Currently, we're just doing about 22%. No? So to support this initiative, of course, the government has made it investment friendly as well as easy or attractive for developers such as Citicore by introducing key frameworks anchored on the Renewable Energy Act of 2008 and various policies and incentives, which are both fiscal and non-fiscal, such as importation, tax-free importation of renewable energy components, income tax holiday, priority dispatch to the grid, having or hosting green energy auction programs with long-term supply contracts. So all these things encourage renewable energy developers like Citicore to rush and develop its pipeline projects. Now, speaking of pipeline projects, the third investment highlight is that Citicore has a sizable pipeline across various renewable energy platforms. So it's with a near-term, medium-term, and long-term horizon. For the short term, Citicore intends to add a total of 2.3 gigawatt of solar installed capacity by year-end 2025. No? So that's quite a big leap coming from the 285 that we have right now. And this is including the capacity, the JF capacities that we won last year, and it's mandated for delivery by year end, December 2024. In the medium term, or by end 2028, Citicore targets to complete its 5 gigawatt solar capacity, and we will be complementing this with battery energy storage system, or BESS. So that's an exciting avenue for us. And of course, our foray into onshore wind and the completion of our run-of-river hydro project will further contribute to our installed capacity. In the long term, Citicore will be venturing into offshore wind, and this is going to be together with a global partner, adding a total of 3.1 gigawatt with already secured wind energy service contracts from the DOE. So quite a tall order, no? And then you might ask, no, how is this all possible? The fourth investment highlight is that Citicore is fully integrated in its business capabilities. It already has a track record of bringing projects from end-to-end development. No, we're used to developing greenfield projects. Citicore has the ability to de-risk project execution with strengths in land acquisition, land conversion, securing regulatory permits, local, municipal, provincial, national, you name it, we're able to do that. And in terms of engineering, design, and construction, we are, of course, that is our bread and butter. So we're able to move pipeline projects into the ready to build stage. So you can be rest assured that there is, in fact, a visible rollout of 1 gigawatt per year as planned. Now, in terms of the fifth investment highlight, CREC has a very flexible offtake strategy and a very good existing customer base. No? So from bilateral contracts, which are negotiated by within two parties, we have clients like multinational companies, we have distribution utilities, as well as electric cooperatives. We are also able to enter into long-term government contracts. No? So this is through the Green Energy Auction Program. So you'll see that this has a longer term ranging from 15 to 20 years. We are also able to sell our generated capacity through the spot market. So this is under a take or pay setup now. So Citicore has the ability to optimize its offtake mix. We have an in-house credit scoring system for our customers, so we're able to assess their capacity to pay and ensure that any collections are indeed collected at the proper time. And we also have a very efficient in-house sales team that plots out how we should maximize our offtake strategy. And speaking of management team, the sixth investment highlight shows that CREC is driven largely by an entrepreneurial vision. Of course, this is complemented by industry experience, giving Citicore a well-grounded but very seasoned management team. Yeah. And of course, it's not just the management team's track record of delivering and executing projects, but also having the track record as far as having access to financing, whether it be fixed income, capital markets, preferred shares, bonds, and the like. So we have very good banking relationships or financing relationships with other counterparties. No? So that gives the additional credibility to the group. And finally, Citicore's business model is anchored on sustainability. We have embedded ESG in our operations. We work with the local communities and stakeholders that are within the proximity of our solar facilities with three ESG pillars guiding our community activities, namely environment, education, and employment. Of course, the most visible and perhaps the most important would be our agri-solar initiative, wherein we maximize the use of the land, marrying both the agriculture and power generation intent. So basically, we plant vegetable crops underneath the solar panels, and the harvest is sold to off-takers, and we share the income to the displaced farmers. So they have additional income that way. To date, we have harvested more than 3,700 kilos of assorted vegetable crops. And we expect to continue our agri-solar initiative in all of our future solar plants. Now we move on to the asset portfolio of the company. The current CREC asset portfolio consists of 285 megawatts of gross installed capacity. We have a pipeline of 10.4 gigawatts of projects, which are meant to be rolled out, as earlier discussed, over the short term, the medium term, and the long term. What you will see here is that Citicore has its projects fully geographically diversified into Luzon, Visayas, and Mindanao. And in addition to the geographic dispersed projects, we are also balanced in terms of technology platforms. While most of the project portfolio will consist primarily of solar projects, because of course, solar is the low-hanging fruit and the fastest to roll out. Over time, we will diversify into onshore wind, run-of-river hydro, as well as energy storage system to achieve a close to base load like generation output. So that means our portfolio will be able to include to sell to the night peak, mid-merit, and base load customers. So that's having the flexibility in terms of providing generation power to our future and current customers. The next couple of slides will show you the different 10 operating projects, again with a combined capacity of 285 megawatts. So you'll notice in this slide that mostly Citicore owns 100% of all these solar projects, with the exception of Arayat 1 and 2, wherein this is a 50-50 joint venture together with AC Energy. Okay. Moving on to the ready to build and under construction projects. Currently, we have 8 solar projects that are currently under construction and 1 run-of-river hydro project, which is also under construction. And put all together, this has a combined gross capacity of 1.609 gigawatts. So you'll also see here that 6 out of the 8 solar projects are meant for delivery by year end, as part of our commitment to the green energy auction program that we won last June 2023. Okay. I'll turn you over to our CFO, Mia Cortez, for the summary of CREC's operational and financial highlights.
Thanks, Joan, and good afternoon to everyone in the call. To summarize CREC's key operating and financial data, for consolidated revenues, the 3-year historical revenues increased from 1 billion in 2021 to 3.7 billion in 2023, or by 265% or 2.68 billion. The year-on-year growth in terms of revenue for 2023 versus 2022 grew by 32% due to the increase in customer power supply contracts. Meanwhile, the increase in revenues from 2021 to 2022 also relates to new customer contracts from the trading segment and CREC's lease income from non-CREC lessees. Please note that CREC became a full-fledged REIT company in 2020. For consolidated gross profit, EBITDA, and net income, all these also increased from 2021 to 2020. Gross profit increased by 60% to 1.29 billion in 2023 from 516 million in 2021. EBITDA increased by 171% to 1.5 billion in 2023 from 556 million in 2021. Meanwhile, net income increased by 171% to 1.5 billion in 2020. Net income increased by 374% to 910 million rather in 2020. So the increase in our gross profit, EBITDA, and net income are mainly driven by the increase in our revenues and on the share income from operations of Phase 1 and Phase 2 Arayat Solar Plant, which was commissioned in March 2022 and 2023, respectively. Note that as a joint venture company, the revenues or net profit of Arayat Phase 1 and Phase 2 are included as part of other income in the profit and loss. For operating cash flows, this increased from 359 million in 2021 to 905 million in 2020. In general, CREC's operating cash flows have been positive and growing as a result of strong offtake contracts, business expansion from CREC segment, and operational efficiency. For CapEx, this increased from 30 million in 2021 to 6.9 billion in 2020. In 2022, CapEx spending amounts to 751 million. The 2022 and 2023 CapEx relates to various land acquisitions, land developments, and construction-related activities for our renewable energy. Our net debt stood at 3.7 billion in 2021, 4.4 billion in 2022, and 9.3 billion in 2020. The debts were used to finance the development, acquisition, and operation of our renewable energy. Net debt increased to 9.3 billion in 2022 due to the issuance of CREC ASEAN green bonds, which were used to finance various land acquisition for development of our solar plants and from the additional borrowing from our project financing arrangement also to develop the solar plants. Our net debt to EBITDA is 6.2 times, a bit higher compared to 2022 numbers, mainly because of the increases in our loans, which are generally used for the construction and acquisition of various land and solar projects that we are undertaking. And we expect that to beat the margin, net debt to EBITDA ratio to improve once these projects have been operationalized by the end of this. Summarized also in the next slide are the historical key information of our operating plans. You'll note here that as of the end of December 2023, we have showed an average EBITDA margin 91% across our 10 operating. This ends our company presentation. I now turn you back to her for the question and answers.
Yeah, thank you so much, Ms. Joanne and Ms. Mia, for that insightful and informative presentation. Now, it's time for us for the most interesting part of this program. So, the live question and answer. To our audience, you may continue typing in your questions on the chat box, and we will address as many questions as possible given the limited time. So we have received a number of questions sent earlier now. So for the first question, how much is Citicore affected by the recent volatile and fluctuating WESM prices?
In terms of our portfolio, we allow about 5% only in terms of exposure to WESM. We're actually fully contracted in terms of our contracts because prior to construction of our solar plants, we're actually establishing already various supply contracts with our customers. You'll note also that based on what was presented earlier in terms of our revenues are growing, and that is primarily to secure contracts prior to commencement of our project or pipeline of projects. So with respect to volatility in WESM price, we allow only 5% in terms of exposure, and that is to take advantage of the higher WESM price. We know that during the first few months at the start of the year, WESM prices are lower, but we see that towards April, May, it's picking up because of the summer season. So we don't expect WESM prices to go at its lowest point, given that there's a supply and demand requirement also with respect to the electricity requirement of our country.
Got it, Ms. Mia. Thank you so much for that. And yeah, just a follow-up question, Ms. Mia, what is your outlook on WESM rates moving forward, maybe 2024 to 2025, and how would it affect the performance of Citicore?
In terms of WESM, we actually expect it to be, if not higher compared to this year, stable, similar to what has happened in the past 2 years. And as mentioned earlier also, we don't foresee any significant risk with respect to revenues of CREC as a whole, because we, as a business strategy, we don't expose the CREC to, in terms of our revenue mix, to significant portion exposure in terms of WESM sales.
Got it. Yeah, thanks, Ms. Mia. To our audience, you may continue typing in your questions on the chat box, and we will address them shortly. Yeah, we have another question on the floor. So this is regarding offshore wind power. So we have seen how those installed wind power get destroyed in USA due to tornadoes. How sure are you that your wind power towers or windmills won't be destroyed with our typhoon?
Interesting question, no? I think the location of our onshore and offshore wind are based on the World Bank study that the Department of Energy has conducted, identifying the wind corridors all over the country. No, having said that, I believe that there are, of course, natural calamities that are beyond our control. However, these risks, whether they're low risk or remote risk, are covered by having insurance policies in place, such that there would be insurance coverage should there be any damage to equipment, as well as any business interruption, perhaps, that are brought about by these natural calamities.
Yeah. Thank you so much, Miss Joanne. Yeah, we have another question on the floor. How do you decide location of the project or power plant?
Ah, thank you for this question. It's actually interesting that um, if you follow the renewable energy players, we are one of the unique developers that have actually communicated and announced where our future projects are located. Meaning to say, we have undergone an intensive study of the irradiation all over the country. No? So that's why you will see that we have solar facilities in Luzon, Visayas, and Mindanao. Forward to our plants that are currently under construction, you will see that these are also in areas where there is high irradiation, and second, there is grid capacity available. So that those two things determine whether we are going to acquire land in those specific areas and subsequently build our solar projects.
Thank you so much, Miss Joanne, for that. And before we proceed, no, with the next question, let me first acknowledge the presence of CREC President and CEO, Mr. Oliver Tan. Hi, sir. Good afternoon. And yeah,
Hi,
to
good
our
afternoon.
audience, yeah, please continue typing in your questions on the chat box and we will address them shortly. Yeah, so there are questions coming in. And yeah, for the next question, what is the advantage of investing in CREC versus in CREC?
So thank you for this question. We always get asked, no, what is the difference or what kind of investor invests in CREIT and CREC? For those that like basic dividend income or dividend yield quarter after quarter, then obviously CREIT would be your safe choice. No? It's predictable because you're required by the REIT law to dividend out 90% of your net earnings. CREC, on the other hand, of course, being the sponsor of the REIT, is more a development and growth company. So if you are the type of the investor that would want exponential growth in your portfolio through capital appreciation, then CREC perhaps would be a better alternative. Bear in mind also that we do have a dividend policy in place for CREC. We have 30% of our previous year earnings that can be dividended out. Um, if you further study the relationship between a REIT and its sponsor, there are monetization activities when, for example, the sponsor sells an asset into the REIT. Obviously, the results of the sale proceeds will flow back to the sponsor, and that gives you an upside in terms of available dividends. No? And because we have a 1,000 megawatt pipeline for the next 5 years, you can actually have a sense of predictability as well, enabling the sponsor to have a steady um, asset infusion into the REIT and thereby have a semblance of a recurring gain on sale, which will be paid out on as dividends. But of course, the best advantage is if you're invested in both. So that's the best combination. So you have a steady income through the REIT, and then you have a growth portfolio through the sponsor.
Right, right. Thank you so much, Miss Joanne, for that very comprehensive and insightful answer. And again, for our audience, please continue typing your questions on the chat box and we will address them shortly. The next question we have on the floor: with high inflation but cost of solar panels getting cheaper, how are your total project costs relative to your winning bids in GF2? Are you expecting higher returns?
Yeah. So panel prices is at historic low. It basically offset the high borrowing cost. And with the JUP tariff, we are confident that we will be able to achieve very good, decent return. Though I'm not at liberty to provide what is that, but decent return.
Thank you so much for that, Sir Oliver. Yeah, we have another question, checking back regarding offshore wind. So for the offshore wind pipeline of CREC, from which countries will the tech be coming from? Do you have international partners already?
We are in talks with a European-based um, strategic partner, and potentially we're hoping to wrap up the discussion, uh, if not within the month of June or July. Okay, and we will be announcing and disclosing the same. But we are partnering with a strategic investor for both onshore and offshore wind.
Got it. Looking forward to that, Sir Oliver. Thank you so much. Another question we have on the floor: how do you foresee the significance of BESS, or the Battery Energy Storage System technology, in the strategy of Citicore?
Hmm. That's actually the most exciting part. Okay, our strategy has always been to build solar PV first, and then subsequently complement it with battery energy storage system. The current price of battery is already commercially viable. Therefore, it allows us to be able to provide electricity on a much stable, longer hours. Um, Obviously, solar generate during daytime. Therefore, we cater to the day peak requirement of the customer. With the battery, we are able to cater to a 12 to 15 hours continued dispatch to the customer. Therefore, it will be able to expand our market reach to include that of the night peak.
Got it. Yeah, just a follow up on that, Sir Oliver. No? How about in the Philippine renewable energy industry as a whole? Since this is one of the emerging technologies abroad, how do you think will the BESS technology affect the RE industry?
Yeah. So the battery energy storage system will actually catapult the solar and wind to become the new renewable energy baseload, and therefore relegate the fossil fuel as ancillary. So this is disruptive. So the technology will be disruptive and change the change and shake up the industry, the power industry.
Right, a disruptive technology indeed. No. So again, to our audience, please continue typing your questions on the chat box and we will address them shortly. And we have another question on the floor. Given the recent rising global heat index and the hottest recorded period last month, what is your outlook in terms of how it affects performance of solar power market and the price per kilowatt?
Yeah, so we've seen NGCP declared red alert, yellow alert last summer, and obviously it's causing the spot market price to go up because of the supply deficit. And we are actually that's why we pioneered the agro solar concept. One of wherein we allowed farmers to plant root crops beneath our solar tables. One of the advantage or the objective, other than providing or augmenting the farmer's income and utilizing the land for dual purpose, the other advantage of that is it cools down or it provides adequate air vent to our solar panels, such that in times of extreme heat, it will not affect the efficiency of our panel.
Got it. Thank you for that, Sir Oliver. Another question we have on the floor. How confident is CREC management that they can sustain their 1,000 uh, megawatt per year target, given that they have less than 200 currently?
We are uh, confident that we will be able to deliver the 1 gigawatt every year, mainly because we already pre-identified the locations and did our technical due diligence in these areas. The first gigawatt is already under construction. This will be completed by end of the year until early next year. The next phase are essentially expansion of this first gigawatt. Therefore, it's really having the advantage of expanding it via clustered areas and not looking into entirely new location, which you will take time to do your community relations, stakeholder relations. So from our first gigawatt and with the battery, it's easier to increase our capacity by 3 times.
I see. Thanks for that, Sir Oliver. Another question we have on the floor. What are the plans for disposal of solar panels after its end life? Will it not cause environmental impact that might cause government to intervene in its operations?
Very good questions. Uh, uh, so what we've been doing for the past 8 years, at least for those panels that were replaced, we actually use them and donate it as a waiting shed to various communities. I think if we have pictures, we will be glad to show you that. And we also recycle these solar panels in terms of it can be made as school tables and the likes. No, now in terms of as an industry whole, I think there was already a study globally that the solar panels can be recycled after at the end of their life cycle.
Got it. Thanks for that, Sir Oliver. And still on the topic on solar panels, does CREC benefit from the oversupply of solar panels? If so, please provide color.
Yes, not only Citicore, I think all solar developer are benefiting from the current oversupply of PV panels in China, therefore driving the solar panels at historic low. Just to provide colors, uh, 2 years ago, 3 years ago, solar panel prices is at around 19 US cents per watt peak. Now, today, because of the oversupply, we've seen panel prices hovering around 11 to 12 cents.
I see. Yeah, got it. Thanks for that, Sir Oliver. And again, to our audience, please continue typing in your questions on the chat box and we will address them shortly. Yeah, we have another question on the floor. How do you foresee CREC perform after the IPO?
Sorry, how do we?
Expect
How
CREC
do
to
you
perform.
foresee CREC perform after the initial public offering?
Okay, I will answer that question from a business perspective and not from the stock price. Obviously, your question is how do we perceive the stock price to perform? We don't have a crystal ball, and that's basically the essence of the capital market. It's really sometimes prices are driven by emotional, sometimes any other reason. No? But from a business perspective, we are excited because the renewable energy sector is just as it at its infant stage. The huge requirement of the government to replace this fossil fuel will probably take more than 10 years to even fill up or replace the existing fossil fuel, not to include year-on-year demand. Okay. Now, this shift to renewable energy is a necessity for our country because we are a net importer of coal and gas. When you go back to 2022, because when Russia invaded Ukraine, we've seen coal prices shoots up, therefore drives up the cost of electricity. Back then, even countries like ours that has the money to buy, we cannot buy because Indonesia actually banned the export of coal. Okay, so this shift to renewable energy is in order for our country to achieve energy security more than anything else, more than climate change, more than Paris Convention or COP28. It's really a necessity that we need to achieve. And in order to fill this demand, this is going to be a boom cycle in the next 10 years now. So how do we perceive Citicore after the listing? From a business perspective, this is just an onset of what the traders normally or the technical analysis or technical analysts call it a bull cycle. From a business perspective, from a stock price, obviously, I hope that the stock price will mirror the business performance of the company.
Thanks for that, Sir Oliver. Another question we have on the floor. Can you rank solar, wind, hydro projects that you intend to do in terms of capex cost per gigawatt built?
The most expensive would be hydro, followed by wind and solar from a dollar per megawatt capex cost. But from a levelized cost of energy, because while hydro has the more expensive capex cost, it has a higher efficiency rate, around 60%, the capacity factor. For wind is around 40%. For solar is around 20 to 22%. So from a levelized cost of energy, obviously the cheapest will still be solar, but wind and hydro are not far apart.
Got it, sir. Yeah, another question we have on the floor. What was the additional upside in percentage that the solar output during the high heat index month on solar power?
The the solar output is really not dependent on high heat. It's dependent on solar radiation. In fact, at high heat, high temperature, it drives down the efficiency of the panel because that's why floating solar has higher efficiency than a solar farm because it is in the floating above the water, which has a coolant effect to the panel. That's why during high heat, high temperature, it's important that we do our grass cutting properly to promote good ventilation so as not to affect the panel efficiency.
Thank you for that, Sir Oliver. And to our audience again, please continue typing in your questions on the chat box and we will address them shortly. Another question that we have on the floor. How many projects are you planning to inject CREC annually?
We plan to infuse the first gigawatt of solar upon completion next year in batches, of course. So the 1 gigawatt maybe infused to CREC in batches over the year of 2025.
Yeah, got it. Thanks for that, Sir Oliver. Another question, what is the supplier profile of the solar panels and solar infrastructure of Citicore?
What is the, sorry, can you repeat? I think you,
What is the supplier profile of the solar panels and solar infrastructure of Citicore?
Supplier profile. Okay. We source our panels from the tier one Bloomberg index in terms of panels. In terms of inverters and other key components, these are mostly imported from China as well, but European brand made in China.
Right. And a follow-up question on that, Sir Oliver. Do you foresee any risk the majority of solar panels, brands, and equipment you source come from one country, for example, China, as you mentioned, especially with geopolitical tensions in our region?
There obviously there is a real risk. That's why management starting to diversify its supply chain um, outside of China. Unfortunately, even if you ask the U.S., it will take time to diversify outside of China because China has become the global manufacturing hub of the entire world, right? So it will take time to diversify the supply chain, but there's a real risk, obviously, due to geopolitical tension.
Got it. Thank you for that, Sir Oliver. Another question that we have on the floor. What is your dividend policy?
Dividend policy for CREC is 30% of prior year's income, or up to 30% of prior year's income.
Right. Thanks for that, Sir Oliver. Another question. What is the timeline on transferring CREC's operating assets to CREIT? Will the 1 gigawatt be transferred annually or yearly as well?
The plan is to transfer the first gigawatt in batches, made perhaps in batches of 200 or 250 megawatt into series, depending on the funding requirement of Siri to acquire this asset. But the plan is to complete the infusion of the 1 gigawatt within the year of 2025.
Thank you for that, Sir Oliver. Another question that we have on the floor. With the C family owning a significant stake in CREIT, will there be a regulatory complications on transmission and generation cross ownerships if power plants are infused to CREIT?
CREC is a property company. It is not a renewable power generation company. Exact reason why SM invested in CREC and not in CREC. So the answer to your question, there is no risk, and these were validated, confirmed by several legal opinions already.
Yeah, got it. Thanks for that, Sir Oliver. Another question that we have on the floor. What levels of typhoons in CREC solar wind farms stand? And how quickly can you restore operations in case of massive damage?
Um, so you come in a broken, but the question is, in terms of natural disaster, how fast we can. First, all our solar plant are diversified in terms of geographical location. Second, all our plants are covered with property insurance at 100% replacement value, and business interruption insurance that covers up to 6 months of revenue losses. Based from our experience with the most recent or the latest super typhoon Odette that basically wreaked havoc in Cebu, our Toledo plant, the longest we've seen to repair the losses is at around 2 to 3 weeks, and the losses actually caused by the damage caused by the typhoon is approximately or lower than around 2% of the total plant capacity.
Yeah, thanks for that, Sir Oliver. And to our audience, please continue typing in your questions on the chat box and we will address them shortly. So we will accommodate as many questions as we can given the limited time. So the next question that we have on the floor, how attractive or in demand is renewable energy as an electricity source for off-takers in the market?
How attractive? Solar is cheaper than coal. Okay, and as coal prices goes up, the more attractive the price of solar compared to coal. So, and then for renewable energy in general, um, because it does not have input cost or fuel cost, it enjoys or it has a natural hedge from inflation because we don't have input cost. That's why our EBITDA margin historically for the past 8 years is at around 90%.
Got it. Thanks for that, Sir Oliver. Another question that we have on the floor is your battery technology is expensive. Do you ensure battery economics work out in the end?
Battery is already commercially viable, and we believe it will continue to go down because of the evolution in technology. Aside from lithium ion, I think there are already at advanced stage in terms of other technologies such as the sodium.
Right. Thanks for that, Sir Oliver. Another question that we have, what is your strategy on sales for the next couple of years in respect to your projected growth? What or who is your target market?
Yeah. If you look at the 1 gigawatt solar plants that we are building today, 80% of that would be the sold to government through the JAP, while the 20% would be sold to um, private bilateral, meaning commercial and industrial customers. Over the short term, the next 2 to 3 years, we would want to, as much as possible, we would want to retain uh, 30% of our capacity to be sold to the spot market. For obvious reason, we believe spot market price will remain attractive and elevated in the next 2 to 3 years. But towards the 5 year horizon, we would gradually shift to more bilateral contracted type of contract.
Got it. Thanks for that, Sir Oliver. Yeah, we have an interesting question. Why list now when the market sentiment is bearish?
Again, my answer would be similar to the previous question. We decided to list because we are at an exciting phase in the renewable energy sector. This is going to be a bull boom for the next 10 years. Uh, so it is independent of the market condition today. And if you are buying our IPO, this adapt a perspective that you are investing in the business more than just the fluctuation of the stock price.
Got it. Thanks for that, Sir Oliver. Another question that we have on the floor, do you have a 3, 5, or 10-year pro forma profit and loss, assuming your IPO is successful?
We have, but I'm not sure if we are allowed to share that to the public. But just to guide you, um, today we are at gross installed capacity of 285 megawatt. Next year we will complete 1 gigawatt, so that means we will increase the revenue by four times, 4 to 4.5 times, and then year on year, subsequent year on year, 1 gigawatt of new solar, right? So more or less, you can project the revenue growth, EBITDA growth, and net income growth in the next 5 years.
Got it. Thanks for that, Sir Oliver. Another question that we have on the floor. Earlier, management said that CREC will be able to supply baseload power. Would like to understand how this can work, considering that most of CREC's RE platforms are intermittent sources.
Yeah. Um, what I meant by close to base load is on a portfolio level. So we have solar, and then we are building our onshore wind. We'll start construction next year, the onshore wind. So solar obviously produce or generate at daytime, wind produce at nighttime, and then with the battery, we are able to smoothen the generation output to very similar to a base load light.
Got it. Thanks for that, Sir Oliver. Another question that we have on the floor: how does CREC compare with its competitors like ASEN, SPNEC, and other similar corporations?
Let me pick on ASEN first because uh, they are our partner actually in the Araya project. If you look at how both companies were constructed, obviously ASEN is more of an investment holding type of company. They grow their portfolio via acquisition, merger and acquisition. CREC, because of our DNA, because of our affiliation to Megawide, we are builders. So we do greenfield development of solar and other renewable energy assets than M&A. So we grow our business through greenfield development. There are pros and cons to these two different business model. It's a risk reward ratio. Obviously, developing from greenfield, higher risk but higher return. Acquiring a mature asset, lower risk, lower return. That's the first. Second, we are Philippine focused compared to ASEN, they're regional. There are pros and cons. Dealing with one government is enough headache compared to dealing with five government regulators. Okay, again, there are pros and cons in terms of diversification, in terms of government. And third, we have the we are in terms of the supply chain, we do everything in house, from development to construction, EPC. Post completion, we do the operation and maintenance. The advantage of that business model is one, speed to execution, and also price competitiveness. Imagine tendering out, so 1 gigawatt, maybe 10 to 12 projects. Imagine tendering out 10 times or 12 times versus we doing the EPC in-house. And we have the advantage because we are an engineering company. Therefore, we're able to find solution to technical difficulties such as the grid congestion and the land difficulties.
Right. Thanks for that, Sir Oliver. And again, to our audience, please continue typing in your questions on the chat box, and we will be wrapping up our Q&A shortly. Yeah, we have another question on the floor. Who are the institutional investors who subscribe to the CREC offer, and what percentage is their total equity share, if you can share?
I'm not sure we're allowed to share who are the current institutional investors, given that we are still in the offer period currently. So
Maybe just to provide color. These are mostly long only hold institutions and good representations from the region. So good balance. Of course, you will have your ESG team, long only fund, some mix of hedge fund. So good balance from a long only and hedge fund because you want trading liquidity also, right? Because everyone will be long term hold only. Then there's no trading activity. So I think it's a good mix.
Got it. Thank you so much for that, Miss Joanne and Sir Oliver, for giving more color. Yeah, we have another question on the floor. If feed-in tariff is removed, will solar and wind still be competitive or affordable?
Again, if what is removed?
So,
If feed-in tariff. Okay.
yes.
Yeah. There's no more feed-in tariff. The last feed-in tariff was 2016. The green energy auction program by the government cannot be termed as feed-in tariff because it is already uh, uh, auction based on market pricing, right? And the government does not provide subsidy to this, and even without the feed-in tariff, because solar are already competitive, cheaper than coal. So from a market price point, uh, on a standalone, it can compete and be profitable without feed-in tariff.
Thanks for that, Sir Oliver. Another question we have on the floor. With power plants to be infused in CREIT, will we expect dividends in CREIT to fluctuate with electricity prices, or will there be a guaranteed lease structure similar with existing CREIT assets?
It will be structured similar to the existing asset, wherein there will be guaranteed base lease and variable lease.
Yeah, just to refresh everyone's memory, the guaranteed base lease provides downside protection on any rental reversions. No? So this is quite unique compared to other commercial REITs wherein as the tenants leave, there might be a lower subsequent rental when the when the building or the space is leased out to somebody else. With C-REIT, the leases are long term. In fact, we have the longest lease expiry among all of the seven other REITs that are listed. Typically, they range about 5-7 years. Our weighted average lease expiry is about 21.7 years, which matches the long term contracts of the tenants to their customers. So there is that downside protection, but there's also that share in the upside in case the tenants are able to secure higher rates upon renewal, as well as any efficiencies in the production of their generation capacity. So it's like having the best of both worlds, diba? So there's a minimum there's a protection from the downside, but you share on the upside as well.
Thanks for that, Sir Oliver and Ms. Joanne, for that insightful answer. Yeah, another question that we have on the floor. Can you highlight the biggest risk that can potentially delay or derail implementation of your future project?
Um, yeah. So if you look at the 1 gigawatt under construction, obviously the biggest risk there would be completion risk. It's a construction risk because land were secured already, even the grid rights, even the major components are already procured. So it's really the installation construction risk. If you look at the 2 gigawatt and in our subsequent pipeline projects, obviously the risk there would be our ability to secure land at a competitive price, our ability to secure the project permits on time, and construction risk as well. But we have the track record of delivering projects, and we have the local know-how in terms of managing key stakeholders and navigating through the various issues relating to land acquisition and project permits, and as well as the grid rights. And and since we are uh, the people behind our engineers like Edgar and our close DNA, and we have 25 years of construction experience. So I would believe that the construction risk or execution risk is mitigated via our track record. And we build, I mean, Megawatt built more complex structure than a solar plant.
Got it. Thanks for that, Sir Oliver. Another question we have, interesting question. Does your hydro market also include renewable energy from coastal waves?
No, our hydro is a runoff river hydro. Uh, so coastal wave sounds exciting, but no, currently we don't have that technology in the Philippines yet.
Got it. Yeah. Thanks for that, Sir Oliver. Another question on the floor. Is there a stabilization fund for the IPO? And who will manage this while it is up?
Uh, there is a stabilization fund as part of compliance under the PSC rules. Who will manage it? I believe our underwriter, right? UBS.
Yeah, thanks for that, Sir Oliver. Yeah, another question. Will the IPO proceeds be solely used for expansion? And are all the shares primary? And after this IPO, what other plan capital raising are you going to undertake?
Yeah, so the IPO were primary share sales, and the use of proceeds are clearly defined in our prospectus. This will be used to fund the capex requirement of our pipeline projects. The subsequent fundraising will obviously be primarily at the OpCo level because we fund solar plant via the 70% debt and 30% equity at the OpCo level. In terms of the equity or at the parent level, with an expanded balance sheet as a result of new capital from the IPO and from the sale of SM, we are able to lower down our debt equity ratio from current of 1.3x to below 1x. Effectively, we are able to most likely issue green bonds later after the IPO.
Got it. Thank you so much for that, Sir Oliver. And in the interest of time, we will accommodate one more or one last question. And we have a question on the floor. What is the reason for listing CREIT before CREC?
We toss a coin and it so happened that the series also, yeah. Back then in 2022, if you may recall, REIT seemed to be the flavor of the month. After A-REIT was listed and then subsequently all the other property REIT were listed, and we've seen the excitement, the investors' appetite for REIT. That's why management decided back in 2022 to do an IPO on a REIT, and we felt that since this is a renewable energy themed REIT, it will really be a good to start than doing the IPO of CREC. And true enough, under that setup, we believe it's a win-win situation. The issuer are able to price it favorably, and investors are happy. So win-win situation. And we felt because of our pipeline projects, now is a good time to do an IPO at the DevCo, which is CREC. Good time from a business perspective again, setting aside market condition. From a business perspective, it's a good time to invest in renewable energy because we have a long runway for growth. As I mentioned, this is going to be more than a decade growth. We are not even factoring the shift to EV, just feeling the supply deficit from our current demand. So if you factor in EV, that will further increase the demand for renewable energy.
Yeah, thanks for that, Sir Oliver. And thank you, everyone, for that lively discussion. We received quite a number of questions, but I know all of us are bringing valuable knowledge from today's session. But before we end, let me call again CREC management for their closing remarks. Sir Oliver.
Yeah. For a closing remark, I believe that we've clearly communicated our business model, the business proposition. So if you've been following our group, this is already our third public offering. When we did the Megawatt IPO back in 2011, for those who invested in the Megawatt IPO and hold on to their shares for 5 years and was able to exceed that time, the IPO investor would have made a multi-bagger 5x return. Okay, and back then we clearly communicated that we would want to become more than just a construction company. That's why we entered into transport infrastructure and utility, which gave birth to this Citicore Renewable Energy. Our second public offering was CREIT back in 2022. Again, for those who bought during the IPO and hold on to their shares, again, with the perspective of investing in the company more than the fluctuation of the stock price, you would have made, after 2 years, you would have made around 25%, inclusive of the dividend yield that you received. This is our third offering. We hope to continue to generate wealth for our public shareholders, hopefully at the same return that you received when you invested in Megawatt and was able to exceed at its peak.
Thank you so much, Mr. Oliver. And on that note, we'd like to thank CREC management for the thorough and well-crafted presentation, a lively exchange during the Q&A. This special briefing with Citicore Renewable Energy Corp, or CREC, was made possible by First Metro Securities. And this has been your host, Peter Garnace, and at First Metro Securities, it's hashtag your future first. Thank you so much.
Thank you, everyone. Thanks, Peter.
We put your future first. Backed by the Metrobank Group, First Metrosec provides the best service through different tools and platforms. You can invest in multiple assets in pesos and US dollars. Diversify your portfolio with the country's leading managed funds through FundSmart, and gain access to the country's best trading platforms through web or level up with Pro. Plus trade anywhere with First Metrosec Go. All this and more through the trusted and multi-awarded First Metrosec. Easily open your account today. Trading on the go? Here's First Metrosec Go for you. Easily open your account today with this app. You can download the First Metrosec Go app through Play Store or App Store for free. If you already have it on your device, simply open the app and click Sign Up Now. Next, you need to create a user ID, read and agree to the terms, and provide these information. Once you're done, click the link on the email verification sent. Now, let's complete your account application. First, input your account information. Then, provide your user information. Next, accomplish the investor profile form. Almost there! Read and agree to the terms and conditions. Then click Agree. You will then receive your reference number through the app. Don't forget to save this number because you will need it for your initial deposit. Next, upload or take a photo of these requirements. 1 valid ID, 3 signatures on a piece of white paper, proof of address, and proof of bank account. If you're self-employed, there are additional requirements. Now let's fund your account. You can make your initial deposit through bills payment, online fund transfer, over-the-counter deposit, or remittance. Next, you will need to verify your identity. Simply take a photo of your ID and take a selfie. You're all set. An email confirmation will be sent to you in 2 to 3 business days. Happy trading! For more information, visit our help center at help.firstmetrosec.com.ph. All the options and convenience within your reach through International Finance's best online broker and best online trading platform for 4 years in a row. With First Metro Sec, it's your future first. We put your future first. Backed by the Metro Bank Group, First Metro Sec provides the best service through different tools and platforms. You can invest in multiple assets in pesos and US dollars. Diversify your portfolio with the country's leading managed funds through FundSmart, and gain access to the country's best trading platforms through web or level up with Pro. Plus trade anywhere with First Metro Sec Go. All this and more through the trusted and multi-awarded First Metro Sec. Easily open your account today.